when I see like one or two days we doing it, and I see momentum scalp,
Yeah.
and the volume is high too, bro.
Oh, it's like for sure.
Yeah, I'm like, all right.
Yeah, no, when I see that, I'm like, okay, this is for sure gonna hit. All right, let's see what's going on here. All right, guys, good afternoon, everybody. It is 2 p.m. Today is Monday, January 9th. I got Maddie right here in the background. I'm just gonna set up the room real quick and we'll get started with the mentoring session for today. Do you take any trades after or you're done?
Oh no, yeah, I'm not over that.
Yeah, I was done too. I was not trying to risk it because I looked after it and the market started moving really weird after 8.
Yeah, honestly, I was done at like 7:30.
Yeah. Yeah, that's best that way. I mean, even if we're taking these like trifecta entries, you just need like one or two, or even the breakout, and then maybe one other entry, and then you're pretty much solid. All right. A couple more things here, guys, and then we'll get started shortly. Got this set up. Let me get the Zoom link sent out to you guys here in the premium. All right, let me just get this posted up over here, and we should be good. Hey, Christian, how's it going? All right, so Christian just joined. Let's give a few more moments for people to make their way in. Hey, Fern, how's it going? It's like Eunice is on his way in here too. Hey, Eunice, good afternoon. Christian said everything good about everyone over here. Yeah, no, definitely. Same with me, Christian. It was a good trading day today, so I'm good. Let's get this posted on the social media real quick. And if you guys have any questions, feel free to put them in the chat. Otherwise, I have like one question from Brian. Otherwise, we don't really have any questions for today. So if we don't get any questions, I'm just going to review the trades from today's live session. I'll go over the strategies and we'll see if there's anything else that you guys want to cover. So, it looks like people are still making their way in. Hey, David. Hey, Mike. Yeah, sure. Yeah. All right, guys, got the link posted up. Hey Salim, how's it going, bro? Yeah, I know, man. It's been a while. It's good to see you guys. Good to see a lot of old faces here. I know, like a lot of you guys kind of went on your own and did your own thing. And some of you guys took a break, but I'm glad to see a lot of you guys back here. For this year because we've been killing it last year, and this year has been even better. It's only been like first couple days or second week of this year, but it's been pretty good. So good to see a lot of you guys still here. If you guys have any questions, feel free to pop into the chat. Otherwise, um,
Where's the other question?
downstairs.
The same one?
Yeah, the same one. We got Maddie over here in the background too. If you guys have questions for him, Maddie's been coming over, and we've been doing some basically masterminding, just getting him better on his trading and stuff, and just getting everything on point. So, hey, David, aloha. Definitely. All right, guys. So I think looks like majority of you guys are here so far. It's only 2:06. So I know a lot of people trickle in towards the end of the session or towards the middle. So we don't really have many questions for today. The only main question I have for today is from Brian. So Brian's asking, hey, Sean, I'm still in Florida, family. So he's basically asking, my point is if you can explain about the volume indicator and how we use it as a confluence. I may or may not be on the Zoom. Okay. So basically Brian here just wants me to go over the volume indicator. I'll show you guys, how we use that to our advantage and ways that you guys can use it. I think the volume indicator is basically the last piece that we really need for our strategies here, because all of our strategies are based off momentum, and this volume indicator below has really been a game changer for us in identifying, what's really quality and what's not. So I will go over this more in detail, and I'll explain to you guys, how does this work specifically. So, all right, guys, we'll start off with that question there. If you guys have any other questions, feel free to put them in the chat. This session's for you guys. So whatever you guys need help with, don't feel afraid or shy to ask any questions. I'm here to help you guys out. So if there's anything that you guys want to cover, anything that you want me to review, feel free to drop in the chat. Otherwise, we will be covering this question regarding the volume indicator. Brian's basically asking, how do we use it, and how do we use it to our advantage as a confluence. It's not a standalone indicator that we typically use. It's just something that we use as a confluence in addition to the entries that we're already taking. So we'll start off with that here. Let me just go over to like earlier in the session. And I'll show you guys an example of like how we could possibly use it. So so the market was kind of crazy right here. So I'm just going to skip over like this specific area because this is kind of useless for us right here. But what I will go over is this example entry right here. So right here at 7:15, this would be a momentum scalp entry. So I'll just go over the requirements over here, and I'll just show you how we'll use the volume to improve our confidence in the entry that we're taking. So here are the requirements for the momentum scalp entry. First, you want to confirm the overall trend on the 1 minute, 5 minute, and 10 minute. We did that this morning. We were basically looking only for buys. Let me just go over here and I'll rewind this to this morning's session right here. Thanks, bro. All right, so I'm just going to rewind it to this specific time. And we'll go over all of the requirements here. So for the momentum scalp strategy, first you want to confirm the overall trend on the 1 minute, 5 minute, and 10 minutes. So we'll start off here on the 10 minute. You can see here that we're in a bullish trend. And the reason for that is because price is above the pivots, the trend meter is green, and the pivots are angling up. You want to look for the same thing here on the 5 minute. And you can see it's the same exact pattern, right? Price is above the pivots are angling up, and the trend mirror is also green. So the last thing you want to do is confirm the same thing on the 1 minute over here. As you guys can see, price is above the pivots, trend meter is green, and the pivots are angling up. So once you've confirmed the overall trend, you can move on to the next step right here. For this specific strategy, you don't need the volume indicator, but this is where I'll come into play. It'll come into play, and I'll be able to explain, how is this going to benefit our identification of this specific entry right here. So once you confirm the overall trend, you can move on to the next step. You want to confirm momentum on the 10-minute time frame. So looking over here on the 10-minute, we have a buy signal. That's going to confirm momentum here. Next step, you want to confirm momentum on the 5-minute, which you have a buy signal right here as well. So bullish trend, bullish momentum, bullish trend, bullish momentum. And lastly, you want to confirm the same thing here on the 1-minute for entry. So we've confirmed the overall trend on the 1-minute, 5-minute, and 10-minute. We've confirmed momentum on the 10-minute, which is bullish. We've confirmed momentum on the 5-minute, which is also bullish. And lastly, you want to confirm momentum here on the 1-minute for entry. So this is going to be our catalyst for entry. Once you get a buy signal here, everything lines up. You can go to number 5 and you can enter on the close of the 1-minute momentum candle. So with this momentum candle right here, this is going to be our entry. When you have this setup right here, you can set up your TP stop loss. The original TP stop loss is 100, 300, but due to the high volatility, I've been using 25.50, which is a better risk to reward. So I personally think it's better to use anyways. Just to have a better risk to reward ratio, and then also to have a bit more of a safety net when taking these trades, because price will typically, retrace and then go back up and then hit your TP. So once you have all this set up right here, you already have an entry for a momentum scalp, right? The next thing that I want to confirm here is the volume. So volume isn't part of any of the requirements here, but I'll show you how it'll be beneficial. So like what Brian was asking, can you explain the volume indicator? So what the volume indicator here shows you is basically how many trades are being exchanged in the market at a specific time, right? So you can see right here on open, typically market starts to spike up a little bit, right? You get a lot of volatility. You can see the volume here is very high. So the higher the bars, the higher the volume. This blue line right here is going to be the average of volume. So typically when you see the bars below the blue line, that's going to indicate that it's below average volume. So if you have something like this, price is probably going to consolidate. You can see over here, the bars are pretty much flat, and it's a lot of consolidation around these areas where it's flat. Same with this right here, right? Price was spiking above the moving average right here, and you can see the candles are spiking up and down very crazily. Going over here, you can see price kind of dies down a little bit and goes sideways. And then right here on this candle, this is where you'll use it to your advantage. So basically, we have an entry here for a momentum scalp. If you can see that the volume here is above average, this is typically going to indicate that like price is going to continue to push in that direction and with enough volatility to hit your TP. You can see over here, when volume goes up, it usually stays up for a little bit before it dies down. Goes back up, dies down, goes back up, dies down. Right here, we have our momentum scalp entry. And since we have an above average volume here, odds of it pushing up higher to hit your TP is very likely, right? So with that said, we have a momentum scalp entry right here. We'll let the trade run. And you can see it literally spikes straight to profit target right there. And that's when you would pull out for profit. I think we did take this trade on the live today. Let me check the Telegram. So for the Telegram over here, let's see. This entry came up around 7:15. It was this entry right here. So we actually got into it earlier. So there was one that was technically running from like back here, but there was another one that came up here that we actually missed. So we didn't take this specific one here, but we did take the one that was back here, which pretty much was the same thing. It was same entry, just earlier candle right there. So this is the one that we took, but this one came up right after it. So that's how you would use volume to your advantage. It's not necessary, but it does help with confirming your entry as a confluence. So once you have an entry lined up, if you look at volume here and volume's above average, then it'll probably confirm that it's likely to hit. And if you took this trade right here with the increased volume, this would have pretty much went straight to TP on the next candle. So let's see if there's anything else over here. Let's see. David's asking, are you using 20 for the moving average on the volume indicator? I just use the default settings, David. So I think it is 20. Yeah. So if you go to the settings over here at inputs, the moving average length is 20. So I haven't changed any of the settings. They're just default settings on there. Yeah, that's right, David. It's pretty much built into the indicator. I didn't add it, moving average on it. It was just built into it. Let's see, question from Fern. Fern is asking, with the new wider TP stop loss, do the momentum trades still have the same odds of success, or they be less or more likely to hit TP? It's pretty much the same thing, Fern. The only difference is that the market's moving faster. So not necessarily faster, but it's moving wider. So it doesn't make a big difference. It's just giving you that space to to breathe, basically. Like if price was to retrace over here. So for example, if you took this trade over here, right? Let me just replay to this one over here. So this is the one that we actually took. If you took this trade over here and your TP stop loss was 100, 300, you might have gotten stopped out on this trade if your TP stop loss was too tight, because the volume here is just too, actually it looks like you might have hit. No, so see this right here? This is why you need that extra space, because the back and forth movement is so wide. So that's why I started using the wider TP stop loss, because you need to have enough space here to just basically navigate through this movement. So if you took it with a smaller TP stop loss, you would have gotten stopped out of here. But since I warned you guys yesterday that volatility was a lot higher, you were able to withstand this drawdown and get into it as it hit TP right there. So, I mean, it's pretty much the same thing. There's no real big difference to it, Fern, because, I mean, even if you were to draw the smaller TP stop loss, like, for example, here's another entry right here, right? So if you're looking at this one here, let me see if I could put my TP stop loss right there. So if your TP stop loss was 100, 300, you probably would have skipped this trade here if that was the case, because this one here would be too big of the stop loss would be too tight, right? Because if price was to retrace down, you get stopped out. Even though this one does hit TP, it pretty much blasts far enough to hit your other TP. It's just because the volatility is higher. It doesn't really make a difference. It still has the same amount of win rate. This is typically the TP stop loss that we use in the beginning of the year anyways. The only time we change the stop loss tighter is when the market's not really moving. So like last year during the summer, market was super slow. So it'd be impossible for us to hit these trades the way that we want to hit them, because we'd be holding on to them for like hours and hours on end, because we don't get enough movement for us to get past, you know, the 250 pip TP. So it just depends on the market. I'm not sure if you like are familiar with how the market moves. It moves in seasons. So like earlier in the season, winter, spring, fall is typically going to be higher movement because more people are trading. Typically in the summer, a lot of people are on vacation, so the volatility dies down. So right now volatility is high, so we can use a 25.50. But once it gets closer to summer and the volatility dies down, then we can go back to 10.30. So it just depends on the specific season that you're trading in. We trade all year round, so that's why you have to adjust a little bit to adapt with the market conditions. So yeah, I don't think it makes a difference. I think personally it's more useful to have a wider TP stop loss, and it has better risk reward too. So if you were to lose a trade, which I don't plan on losing any, because, you know, I only take the quality entries, it'll only take you 2 wins to bounce back. So I personally think it's better. Let's see, question from David. David's asking, would you have still also entered the second momentum signal while waiting for the first one to hit, assuming all conditions are met? Yeah, no, possibly I probably would if I had the opportunity. But if I had like 2 trades running at a time, I probably would sit out, because that'd be too much risk. I'd start to stack on a little too much risk. So let's go back to that other entry that we were looking at. So I think all the entries here would have hit already. This is the one right here, right? No, not that one. This one right here. Because there were a lot of entries that came up today. Okay, so this is the one that we were looking at. So there was one entry right here. So this one right here would have hit TP already. And I'm just going to go over each entry here. So I typically won't stack more than 2 entries at a time, David. So if there's just 1 entry running, I would probably take it. So this one right here hit full TP already. This right here was a momentum scout failure. Full TP on that. This candle right here would have been a momentum scout variation. This one would still be running. So you technically would have 1 trade still running. And then this one right here would be the momentum scalp. This one would also still be running. So if this was the case here, and there's actually like a lot more entries. So there's 1 here. Let me just mark this up. I just want to mark up how many trades we're running at the same time, because you don't want to over leverage your risk. We had a momentum scout variation right there, still running active. And then we had another momentum scalp right there. So there's technically 2 trades running at a time. And then this right here, we traced again. So this would be another momentum scalp failure. You're technically having like about 3 trades running at a time. So depending on which trade you took here, if you missed them, then yeah, maybe I'd take the next one, but you'd have like 4 trades running at the same time, depending on which one you took, right? Because you have a momentum scalp variation right here that was pending, or not pending, it was active and in profit. You have a momentum scalp right here running and in profit. And then you have another momentum scalp failure right there running but in profit. And then you have another momentum scalp variation right here running and in profit. So yeah, I probably wouldn't have taken this trade if I had, more than 1 entry running at a time. So if I didn't have any of these entries here, or if I just had one, like say, for example, I took the momentum scalp variation right here, right? And this was still active. If I was to take these 2 right here, then I'd be perfectly fine because I'm only risking 1.5% per trade. So if I'm taking one, say for example, like worst comes to worst and I lose both trades, right? That's a 3% risk. So it's not a big deal because that's how much I normally risk anyways. But if you're taking on, 2 or 3 trades, then you start to increase the risk there, because if you lose 3 trades back to back to back, like you have 3 back-to-back losses, that's going to be a 4.5 risk. And then you can only risk 5% on your FTMO. So that is basically, what I would do. So yeah, if that was the case and I was in these positions prior, I wouldn't enter another one. I only have 2 running at the same time. Max would be 2. Because once you get to 3, if you run into slippage, you're gonna get screwed, right? If it ends up hitting your stop loss, or if price spikes to your stop loss. So yeah, max trades I'd have at a time, unless you're taking with a smaller lot size, David. So if you're taking it with less than a 1% risk, like 0.5% risk, then yeah, you can take multiple positions. But for me, I prefer to look for quality entries and just have them all at 1.5% risk. Because I think today we had a pretty good, we had like 5 wins today. Each trade was for 0.75% profit plus, yeah, because we had 0.75 times 4 trades that we took on the live. It's a 3% profit, and then plus the breakout 2.0 that we took, plus another, 1.5. So it was a total profit of 4.5% for this day, if you took basically all the trades that I took during the live session. So yeah, short answer to your question is no. But if I was in these other positions prior, because I did miss a lot of entries here. If I was in these positions prior, David, I would have taken this one as well. But yeah, we didn't take this one on the live because we already had the other 2 running at the time. Yeah, because we had the first one over here. Let's see. We had the first one at 7:34, second one at 7:34, and then the other entries right here at 7:39. And I think one more entry. Yeah, because and the problem with this here is that they come right after each other, right? Like you'll have a momentum scalp failure, and then it'll be followed by a momentum scalp variation, and then it'll be followed by a momentum scalp. So it just depends on like what you're risking at the time. Yeah, David said, good point on leverage. I could have seen myself closing the trade with that big red candle. LOL, got to trust the system. Yeah, no, exactly, David. I closed early too. You guys saw my profits from today. I should have made a lot more, but even I was getting scared because of the market conditions. Like these over here, I closed for partial profit. I was supposed to make 1,500 on these. Actually, this first trade right here is a breakout 2.0. I was supposed to make 3,000 on this trade, but I pulled out at break even. This one right here, I was making 1,500 as well, but I pulled out early because the market was just super choppy today. And then this one right here, I actually let run to TP, where I got close to it, but not necessarily exactly where I needed to be. There's some slippage on the other accounts, which worked in my favor. But yeah, all these should have been either 3,000 profit for the breakout and then 1,500 per scalp. Let's see. AR Kids Book said, hi, this is Ali. Just want to learn here. Hey, Ali, how's it going? Welcome. Yeah, if you have any questions, Ali, if you guys are brand new here and you guys want to ask anything, you guys are more than welcome to ask questions. This mentoring session is open to everybody. So if there's anything that you want to learn or anything that you're confused with, go ahead and drop whatever questions you guys have, and I'm here to help you guys out. If you guys have your own strategy and you want me to show you how my indicators can help make your strategy better, I can do that as well. Basically all the indicators I've created cover like all corners of trading for the most part. I have an indicator for pretty much everything. Let's see. Question from Fern. Fern's asking, what's the recommended lot for 1K on Halon with new T? What's Halon, Fern? Sorry, it might be a typo. I'm not sure what Halon is. Hanko, okay. For 1K count, I'm trying to think. Well, I mean, you're supposed to be risking 1.5%, right? So, I mean, I don't know what the exact lot size would be, but if you have a $1,000 account times 1.5%, you're supposed to be risking $150. So if your stop loss is 500 pips, how much is it per pip on Hanko? I'm not sure. Because I use, yeah, it got dark. Oh. Now it's just gotta walk, like the sensor has to like. Oh my guys, I'll be right back. Let me just walk around real quick. All right, bye guys. So Fern, do you know how much is it per pip for Hanko? I know I use Hanko too, but I just use my fixed lot size because I don't really know what but your risk should be 150. That's 1.5% risk. So I'm assuming, yeah, let me see. Because I think if you're using a 0.1, it's like 10 cents per lot. If I'm correct. So 10 cents per lot times 50. So you could probably use, here, let me check. Yeah, I don't know what the lot size is because I just use a fixed lot. I typically use like a 0.10. I'm probably not using proper risk on my account, but that's only because I know I could risk more. Like I don't really base my trades on my Hanko account off proper risk because I have more money, right? I just have it like I'll have like less money in there, but if I ever go below the threshold, I can only just add money into it. So I don't necessarily trade it based off risk because it's just difficult. It's difficult to calculate when you are using a broker like that. That's why I like using TradingView, because TradingView, like if I was to use one that was built into TradingView, it'd be easier. But since I'm using a copier, I'm not able to do that. So let's see. You probably would be using hey, Maddie, do you know what the lot size is worth for Hanko?
Hanko?
You don't use Hanko, right? Yeah. I don't think Kevin's on here either. Yeah. Anyways, let's see. 30 times 500. Okay, so I'm assuming. Wait, let's see how much. Okay, I used a 10 lot on my account. So I mean, I could just reverse engineer my profits. Okay, so right here, I use 10 cents. 12 points. So if I made 12 bucks on this account right here, for 12 points, I'm assuming it is $1. Okay, so this is $1 per pip. Cents. $1 per lot size. So let me just do the math over here. So Hanko, I use the 10 lot equals $1. I think so, or $1 per point. So if you're using a Henko account and you're risking $0 times points equals 50. All right, so I think you could risk. Okay, so you could be using a 3 lot, or sorry, not a 3 lot, a 0.30 lot, because 0.30 equals $3 per point. $3 times 50 points equals 50. Yeah, okay. So yeah, if you're going to be taking the scalps with the 500 pips stop loss, your lot size would be a 0.30 if you want to use proper risk. Wait a second. I don't know if my math is right. Is that right, Maddie? Is it like 1 point? So what's 1.5% of 1,000? That's 15, right? Or is it 150? My math sucks.
15.
It's 15, right?
15.
Okay, actually, you should be using a 0.03. Fern, sorry. Yeah, I think it's $15.
But it was 15%.
1.5%.
1.5%.
Yeah.
Yeah, 15.
$15. Okay, so Fern, you should be using. You should be using a 0.03. So and go. Yeah, I think it sounds about right. Thanks, Maddie. Yeah, so that sounds about right. If you have a 1K count, 1.5% of 1K equals $15. So using a 0.03 lot size equals point. Yeah, that sounds about right. Yeah, I mean, you could go higher if you want, Fern. I mean, it just depends. Is 1,000 like all you can risk? Because like for me, I have like 1,000 in my Henko account, but I know I can risk like 10K, right? So I could go even higher. So I could take a bigger risk because you have higher leverage. But yeah, if you really want to use proper risk and you know that like 1,000 is the most you can risk, then I would go with 0.03. But if you have more, obviously, but yeah, like for example, you have more money, but you don't want to put it in the Henko account because it's unregulated. Like for me, I have a lot more money that I can put in the Henko, but I don't do that because I don't want to risk it in case something happens. If I need to deposit it, then I'll put it. But since you have like, I think it's like 1 to 500 leverage on Henko, you can technically risk 1,000, but you could be risking more than what's available. So, all right. No problem. Fern. Let's see. All right, Eunice, we'll see you tomorrow. Let me scroll up real quick and see what else we got over here. Yeah, Christian said that's what he did with the breakout 2.0 on scalp variation. Yeah, I know it's solid. You could have two running at the same time. Another question from Christian over here. Christian's asking, once you pass the 30-day challenge on FTMO, what happens next? Once you pass the challenge, then they give you a verification account. Christian, once you pass the verification, then you get funded. And then once you get funded, they'll send you a contract where you just put in your information. And then from there, they'll give you the funded account, and then you can start trading that to get payouts. And I think 30 days after you start your first trade on your funded account, that's where you'll make or you'll be entitled to a payout. So Yeah. Once you pass your 30 days, well, you don't have to pass 30 days. You don't have to trade for 10 days. So say, for example, you have your 30-day challenge and then you pass your challenge within 10 days. FTMO will email you and they'll say, okay, we're going to review your account. If everything lines up, then we'll give you your verification. A couple hours later, they'll give you your verification account. It's a brand new account, new login. You'll take that trade. And then once you pass that, then you'll go on to the funded. So it's pretty streamlined. You don't have to do anything once you get to that point. The only time you have to do something is when you get funded. And when you get funded, it usually takes like about a week for them to verify it. So I don't know if it's faster now because it's been a long time since I did a challenge. But when I first did it, it took like a week for them to verify it because they had to look over every trade. Yeah, no problem, Christian. Question from AR. AR is asking, I'm here in LA. What is a trusted broker for non-US for indices? I use Hanko. AR. I've used Hugo's Way before. Hugo's Way is okay, but I started having a couple issues with well, they're not really issues. It just took longer for me to get a withdrawal with Hugo's Way. So I don't really, I mean, they're still fine. They still paid me. It just took a little bit longer. But I saw a lot of people using Hanko, so I started using Hanko myself. But I make most of my profits from my FTMO, like my funded accounts, FTMO, MFF, and TFF. But for my personal account, I have a Hanko account linked to it. So if you guys have seen my profits over here, you guys can see all my accounts. So my first account is my FTMO. You can see my profits here, FTMO number 2. This 38 right here is my Hanko account. It's my personal account. This is my MFF number 1, MFF number 2, MFF number 3, and then my TFF. So these are all my profits across all my accounts. I personally think FTMO is like the best option because you get to trade a lot more as long as you're consistent. Like if you know what you're doing, then FTMO makes sense, right? If you're consistent and you can stay disciplined and you're not gambling, then FTMO is the way to go. Like for me, for example, all my trades are 1.5% risk. So it's like, it's impossible for me to blow the account unless I really start making a lot of mistakes. So, I mean, if you're not like consistent and you're not able to trust yourself, like getting out of trades when you need to, then a personal account would probably be better because you can just remove your stop loss, right? That's what a lot of people do. A lot of people, that's how you blow accounts because they'll remove their stop loss and price never comes back. So I think FTMO is the best option, but if you don't want to go that route, then Hanko would be probably the best account for, well, it also depends. So you got to weigh the pros and cons, right, AR? So do you have a lot of funds? If you have a lot of funds, I would just go with a regulated broker. I would use TradeStation. Because if you have TradeStation, so for example, right here, if you have TradeStation, you can just log into your trading view right here and you can trade directly on your trading view. So if you got enough capital to trade a regulated account, and it's not even that much, it's maybe like I would probably say about 10,000. That'd be like normal to have enough margin to cover, whatever trade you decide to take. If you have that much, then I would use TradeStation because you could trade directly on here. It's way easier. But if you want to use an unregulated one, because with the unregulated one, you could trade with $1,000, but you could risk as much as you would on a 10K account on a regulated broker. So, I mean, there's like different questions I can ask you, like depending on like how much capital you have, how worried are you about using an unregulated broker? Like for me personally, I just keep like about 1,000 to 5,000 in my unregulated account. And then when I go past the threshold, I'll make withdrawals. Like I'll make occasional withdrawals just to like set the account back to like 5K. Because obviously with an unregulated broker, anything could happen to your account and that broker has like no one to answer to, right? Because they're not regulated by anybody. So you can't have like the US government go after this broker for taking your money and whatnot. But when you're using a regulated broker, your money's protected. So there's there's pros and cons to everything. But for me personally, I would prefer a trade on a regulated if they had it on a copier. The problem with this here is that I have like 6 accounts here, but they're all MT4. So if I was to trade on TradeStation here, I have to trade that separately. Wouldn't make sense. So once FTMO and these companies start to move over to TradingView, I think eventually they will, because this is the platform to use. So eventually I'm pretty sure they're gonna enable that. And if they have a copier that works for TradingView with like multiple accounts, then I'd rather just trade on here. It's so much easier to just trade directly on TradingView. Like if I was to hit buy here, perfect, right? I'm in the trade, I'm out the trade. I don't have to go on MC4 on a separate platform to just enter and execute the trades. Let's see, Fern's asking, can you trade US30 on the regulated accounts? Yeah, of course. I mean, you trade the future, you trade YM, which is even better. So US30, like I feel like a lot of people don't realize that US30 is just a copy of YM. YM is the actual future asset. So like, for example, if you were to put, let me just open another chart here if I can. Which, pull up the chart real quick. All right, anyways, let me just layout. All right, so let me just put these next to each other. So I'll put YM right next to US30. Like they're literally the same asset. It's just US30 is a copy of YM because YM is the actual asset. So if you put this right next to each other, so this is US30 and this is YM. You can see that they're like literally the same thing. You can see this candle right here. Of course, candles can be a little different, but YM has the actual raw data. So for the regulated account, you can't trade US30 because US30 is an indice, which is a made up asset. It's like what people call synthetic assets. US30 is not a real asset. It's something that a broker creates so that you can make a copy. It's basically a CFD. If you guys know what a CFD is, it means contract for difference. It's just basically the same thing, but the broker is able to make their own prices. That's why you see the prices here a little different, right? You look at US30, it's 33,513. This is from the actual exchange. So this is from the Chicago Mercantile Exchange. This right here, it's 33,665 because this is the real price. This right here is a made up price. It's a price that the broker makes so that they can basically make money off the asset. So what these brokers do is they basically execute your trades and then they make money off the difference. Because what they'll do is they'll sell you it at a premium and then they'll buy it through the actual market here. And then they basically make profit off the difference. If you put US30 next to another US30, like Black Bull, see how the pricing is different? They're both US30, but the pricing is different because each broker sets their own pricing. But all of these brokers are based off the YM asset. This is from, like, you have to pay for this data here. YM is from the actual exchange. So if you guys want this data, you have to pay an extra, I think I pay $4 for it. If you qualify as an unprofessional trader, which I recommend everyone does, because there's really no point in qualifying as a professional trader unless you're like a financial advisor or something like that. If you're just a retail trader, just qualify as unprofessional, or else you're gonna have to pay all these fees for the data. So yeah, if you were to trade on a regulated account, you trade the future, which is YM, which is the same thing as US30. Let's see. Yeah, if you guys have any other questions, feel free to put your questions in the chat. But for the most part, I think that might be it for this so far. If there's anything you guys want me to review, just let me know. Any strategies you guys want me to cover, any entries from today that you want me to cover. I mean, anything really. If there's anything that you guys are confused with or you need some clarification, drop your question in the chat. Otherwise, we might be wrapping this up soon. Let me see if there's any other questions here. I don't think anyone else had any other questions. Nice. CT over here, or Kip actually, he said he had 10 wins and 2 losses. Not bad. CT's chart over here. Yeah, CT and Kip and Sisuk, they still trade after hours, or they trade after the live session. I typically don't trade after then, but a lot of these entries here that CT marked up and Kip did hit. So actually played out pretty good. So let me see if there's anything else here. Oh yeah, someone wanted me to cover the breakout 2.0. So again, guys, I'll just cover the breakout 2.0 from today. Breakout 2.0 is pretty simple. Let me just go over here real quick. So opening was right here. I'm just going to replay this. Opening price over here was 6:30 a.m. there. 6:30 a.m. It's right there. All right, so I'll go over the breakout 2.0 from this morning. It wasn't a smooth breakout though. Like typically the breakout 2.0 will happen right away. But the breakout 2.0 today, we were running into this trade for like a long time. So let me put the requirements right over here. This is going to be the breakout 2.0. So first you want to confirm the trend on the 10-minute, 30-minute, and 1 hour. You can see over here on the 1 hour price is bullish. Price is above the pivots, trend meter is green, pivots are angling up. That's going to confirm a bullish trend on the 1 hour. Here on the 30-minute, you guys can see the same thing. Price is above the pivots are angling up, and the trend meter is green. Once you confirm that, go on to the 10-minute. We'll maximize this. And you just want to confirm that this here is also bullish. So looking at this here, price is above the pivots are angling up, and the trend meter is also green. So with that said, we've confirmed the overall trend. For number 2, you want to confirm the direction of momentum. So right here, you can see that we have a bullish momentum signal. With that said, we're going to look for a buy at this point. You'll enter a long position right here. And your TP stop loss will be based on the movement of price here. So for example, if you wanted to use a 150 TP stop loss, you just want to make sure that it matches the volatility in the market. So if you go over here to London Open, you can see that this stop loss, if you're using 1,500 pips, it's going to be a little farther off, right? So you probably don't want to use 1,500 for the breakout because you want to make sure that you're able to hit this position within the first couple of minutes of open. So with that said, instead of using 1,500, you'll just use 100 right here. And once you have that set up, that's pretty much it. You just let the trade run. If you guys remember this trade from this morning, we took this trade here, but we held on to this trade for a really, really long time. Typically go straight to TP or straight to stop loss. So you typically would know like right away, but this over here pretty much bounced around for a long time until it finally came up and hit TP right there. So typically this trade would take maybe like 10 minutes or so to hit like right away, but this trade actually took about an hour and 30 minutes. It's a very long breakout. That was a trade that I took here. I pulled out early on mine, but there was a lot of other people here in the group who actually hit to full TP. So looking over here at the profits real quick. Let's see. Yeah, so Nelly over here, hold it. He held on to it. He got his full TP on this. You can see his timestamp right there, 6:30. He took the trade, locked in 1,115. Here's my account over here. I locked in partial profit because I closed out at break even. I locked in about 225 on my main account and then 435 off my copiers, around 400 each count. John over here also closed out early, unfortunately. He closed out and he locked in 95, closed out at break even. Christian here took it as well. I think he locked in 750, so he held it for a while. Cameron over here took it as well, locked in a total of 555 on this account. Nelly again right there. Kevin took the trades right there as well, total profit of 4,000. My accounts, Sam over here took it as well. I think he took it for a partial move here, locked in 732. Maddie took it as well. Unfortunately, he got some slippage there, so he lost about $10, but it was just some slippage on the break-even movement. Christian here again too. I think he took the other trade as well. Good profit on there. Brock here took it, locked in 756. So as you guys can see, it depends on like who on how far each person held it. Some people held it for longer than I did. I only locked in about 400. Brock here locked in 700. Sam here locked in 700. Madi over here locked in 1,115. Who else took it? I think that was it. Yeah. So those are pretty much the people who took the breakout this morning. Typically, I wouldn't close out early. I would just hold on to it. But since we had such a spiky market today, I just closed out early. I moved my stop loss up a little too early and it spiked down, hit my stop loss, and then it shot all the way up and then blasted through TP. So that's pretty much the breakout 2.0. Just a reminder, guys, these are the only strategies we're looking to apply. So during the live sessions, we're going to be looking for this pre-market breakout 2.0. And then from there, once we've taken that, we're going to be looking for these three strategies here, which is the momentum scalp failure. And they all come in order. So it'd be a momentum scalp failure, momentum scalp variation, and regular momentum scalp after. So these all come in order, usually, like that. So that's pretty much all you guys need to focus on. Momentum scalp failure, momentum scalp variation, and the momentum scalp. And that's pretty much it. And the breakout 2.0. So basically 4 strategies to focus on. If you guys just focus on these here and you only trade with me during the live session from 6:30 to 8, I think you guys should be perfectly fine. Another thing to keep in mind is to make sure you're using the proper lot size. I only risk about 1.5% per trade. So even if I was to lose a trade, I'll make it back on the next few trades. So super simple, super straightforward. If there's any other questions, guys, feel free to put your questions in the chat. I'm here to help you guys out, but I can't really pinpoint what you guys need help with unless you guys, ask the proper question. So other than that, we've been on the session for about an hour now. If there's anything else that you guys need help with, feel free to drop them in the chat. Otherwise, we'll wrap this up for the day and then we'll pick back up tomorrow for the next live session. So I'll sit around for a bit. And if there's anything that you guys need or want help with, just drop your questions in the chat. So I don't see any other questions here, guys. All right, so I think that's going to be about it for today, guys. We've been on the session for about an hour. Hopefully all of your questions got answered. If you guys have any other questions, feel free to drop them in the chat. Otherwise, I'll wrap it up for now. And I'll see you guys back here tomorrow for the next live session. So, all right, guys, if you guys have any other questions, feel free to email me. You can email me at sean@kodikaitrades.com, or you guys can message me on Telegram at kodikaitrades. Probably easier to get a reach to me that way. Otherwise, if not, I'll see you guys back here tomorrow for the next live session. So, all right, guys, other than that, I will see you guys then. Have a great rest of your day, and I'll see you guys